Perhaps one of the worst trading sessions that we've had in the recent history. The fact that we fell 500 points today on the index alone, we were down sub that 17,100 mark on the Nifty spot, and the futures just about managed to surface around that level at 17,107 on closing bell today, and that's been a vicious 3% fall that you've seen. All sectoral indexes bled. There was not one sector which actually held out. So be it real estate, metals, infrastructure, banks, automobiles, oil and gas, pharma, power, and they were all rank underperformers in today's trading session, as was the case with the market breadth as well, which closed in well in favor of the declines. In fact, there were only 5 to 6 F&O names which actually held out in the green. Rest, all 195, were rank underperformers and closed in favoring the declines today. That said, a couple of stocks which were, of course, the ones which were at the bottom of the pit were largely the metal as well as the other large cap names. JSW Steel, for instance, was down 7% on the futures. Bajaj Finance down 6.5%. And to think of it, Bajaj Finance was a big underperformer all of last week too. And today as well, that price action only got excruciating. Tata Steel lost 6%, Tech M was down 6%, Grasim down 5.6%, Wipro down 5.5%, Hindalco lost quite a fair bit. Even some of the large cap earnings, which to be fair have been some of the best so far in the Q3 earnings season. ICICI Bank, for instance, that also is something that the street completely ignored, and that stock was also a loser today. Or for that matter, Reliance Industries, which was also down 4% on closing bell, and even more at the session lows today. Divi's, HCL Technologies, Bajaj Finserv, Tata Consumer, Tata Motors, Titan, Asian Paints, L&T, all of these stocks bled quite a fair bit, as was the case across the broader end of the market too, wherein you had names like Astral Poly, which was down 9.5%, Hindustan Copper down 9%, Z, which was down 8.25%, Godrej Properties down 8%, GNFC down 8%, and just a handful of movers, which was Bandhan Bank, Cipla, Lupin, ONGC and Muthoot to some degree. That said, we are obviously not alone in this weakness, because it seems to be a global weakness which is currently at play. Year to date, if you were to take a look at various asset classes, Bitcoin, of course, has been the most hardest hit. That's fallen about 24 to 25% on a year to date basis. Gold has seen a minute bit of uptick. Nifty has fallen 0.5%. Nasdaq has lost about almost 12%. Now, I don't know whether we're going to align ourselves with the tech-heavy Nasdaq or fall further, but yes, IT stocks back home as well have been falling under their own weight, as has been some of the frothy newly listed IPO names as well. So be it Zomato, which is now sub the 100 mark, PB Fintech, Cartrade, Nika, Paytm, of course, has been quite the debacle from the word go. Most of these names as well got quite clobbered in today's trading session. So that's really been the texture of the market. One really needs to see where this poison actually stops. You got to wait for the dip and the poison to really settle out a little bit before buying this dip already. It's fine to buy stocks maybe 5% higher from these levels, but you don't want to definitely be catching a falling knife, seems to be the messaging that we are getting from most market experts. So let's see. For now, the US futures, of course, are indicating a mildly positive start, but let's see what kind of global cues we are handed with. Given that it's a truncated week for us, Wednesday being a market holiday, and this is also the penultimate week ahead of the budget come next week, this is going to be pretty crucial.